Today, the Bank of Canada reduced for the second time this year their overnight rate by 0.25% down to 4.5%. So what does this all mean? Stick around to learn what you must know now to be competitive in this market and to know when to buy or sell, and some tools that will help you get there. I originally started writing this blog in April before the first Bank of Canada overnight rate came down on June 5th. My prediction, correct at that time, was it would come down by 0.25%. My forecast was based on the greatly reduced rate of inflation from over 8% to around 2.8% at the time. I again reasoned that there would be a further rate reduction of 0.25% on July 24th, which did just happen. I also reasoned that with the still lower rate of inflation under 3% and the economy starting to stall out due to the punitively high borrowing rates, that further rate decreases are required to give Canada a kickstart and get people's anger off the federal government, who did not seem to be helping us residents, especially in housing. So, am I a genius by guessing both rate decreases correctly? Should I just go right out and buy some lottery tickets right now? Well, I wish I was a genius, but I'm not really. With just some basic understanding of economics from my university days and observing what was happening in Canada and my community, and with a little bit of luck, I made my forecast and hit 100% of my guess. So brilliant, you might say, but what now? Is this really going to help us? You might say that the June 0.25% decrease did not really seem to reduce the borrowing rate. And will this just be the same? I need to explain a bit on what happened over the last few years. Later I will give you some examples of how the lower rates affect mortgages and give you a few tools to do your own analysis. Or you can watch future videos right here to get the scoop. The federal government, in their wisdom, and I'm not sure if that's the correct word, decided about 4 or 5 years ago that before they started raising the bank rate, that they wanted to have financial lenders pre-qualify all new mortgages by adding 2% to the borrowing rate to make sure that when the rates increased, that the borrowers would be able to manage through increased mortgage payments when they renewed their mortgages. With this stress test, the government thought was that they did not want to happen as did in the U.S., where the 5-year subprime mortgages were renewed at much higher rates, causing many U.S. homeowners to walk away from their homes and mortgages as they were no longer affordable. It was just a mess in the USA, and home prices fell drastically. Many people lost their homes. And this did not help anyone except the investors scooping up these cheaper homes. In Canada, this 2% additional qualification stress test actually did help protect many people financing new homes from borrowing over their ability to service their debts after renewal. By adding 2 percentage points to the mortgage qualification, this also dropped the total amount the lenders would lend to the prospective homeowners. The real problem came when the government increased their rates from 0.25 to 5%, which was a lot more than the 2%. I just want to clarify that the Bank of Canada rate is not the mortgage rate you get. Rather, it's an indicator of fiscal policy that suggests that when the overnight rate goes up a certain percentage, that the lenders should increase their mortgage rates the same amount. Not all lenders did this, and private lenders may not have increased their rates at all, although they were probably higher than the larger public lenders at the start. The actual mortgage rate given really depends on the individual's financial status, down payment, history, etc. So let's suppose you were looking for a 5-year fixed rate at 5.25%. You would have to qualify at 7.25%, which means you would only be able to borrow a lesser amount. I will do some examples later on this. Now back to the story of what happened. So after 2 years and 10 Bank of Canada rate increases with no reduction in rates in sight, the banks and other financial lenders were suffering greatly as no one was borrowing any money because they couldn't. This mostly affected new buyers who needed to borrow for their first or perhaps a new larger home as their families grew. The lenders, being competitive companies who wanted to survive and be able to pay their employees and shareholders, took aggressive actions and started cutting the lending rates to borrowers before the Bank of Canada started reducing the overnight rates this year. When the first rates drop of 0.25% occurred in June, most lender rates did not decrease except for maybe some variable rates, because the lenders had already anticipated the rate decreases like I did in this blog, and therefore were not going to lower their rates any lower. My feeling is it might take about a total of 1% rate decrease in the Bank of Canada overnight rate to kickstart the lenders to really start to lower their rates. Some lenders will be more aggressive, so it's worth your while to talk to your mortgage broker if looking for lending, as they have a larger number of lenders to work with rather than a single bank or credit union. Watch my video blogs for a future story on why I normally recommend mortgage brokers over banks, etc. for mortgages. So you now have an overview of what happened with lending rates since the start of COVID. Next, I want to give you some help tips and some tools that will help you do your analysis in the future. What is immediate and probably very important is understanding your own financial situation, your savings, income, and work potential in the future to help you make intelligent decisions in buying or selling your home. There are a lot of tools and resources out there to help you gather knowledge in your local area. Here are some things I recommend and that you should consider in order to be fully prepared once you start your real estate activities. The first thing is to get to know your realtor. To learn about the real estate market in your area, I would suggest you work with a realtor even if you're not planning to buy or sell in the near future. They will be able to set you up with a real estate searchable listing portal which will show you current properties with list prices, the actual sold price, and very specific deals about each property. You might be able to get some of this information on websites like Realtor.ca or others. However, the portal is better because it has more information, and that information can be saved by you. You can watch properties as they go from being listed to pending to sold with the prices. You can tag ones you are interested in and compare various properties by features and prices. Your realtor is a wealth of information. Not only can they assist you on your sale and purchase, but they can coach you in all aspects of your activity and help you find other resources such as tradespeople, accountants, appraisers, or mortgage brokers, and more. They also will have access to property information that you would not likely be able to access. And finally, they're in touch with other realtors and can expedite buying and selling where you might never even be able to find out what is happening in quick or multiple offer deals. Your realtor is really your best friend when in the middle of a deal, so take my word on it. The second thing is to get your financing approved. It is crucial if you are buying to find a good mortgage broker or bank mortgage specialist. I personally prefer mortgage brokers over banks because they have a lot more access to different financial options and services than a single bank can do. And often they can find the best mortgage rates, and as well, the mortgage broker does not charge you a fee as the lender pays them a commission. Of course, if you are already working with a bank and they know you well, then this can also be an advantage, so you might want to stick with them. I want to look at some of the free financial calculators that you can use to determine how mortgage rates affect your ability to purchase your next home and what the impact of the interest costs will be over a period of time and for the whole mortgage period. Since many sellers are actually both sellers and buyers at the same time, it's a good time for those to also see what the downsized home will really cost them and help you decide whether to mortgage or pay cash for the next home after you sell your current home. So now we're going to look a little bit at mortgage calculator tools. At the beginning of the blog, we were talking about the reductions in the Bank of Canada overnight rates. This is important because this is used as an indicator to the banks to raise or lower the lending mortgage rates. The bank mortgage rates will typically be a few % higher than the overnight rate. You can search for local rates for the banks in your home area on the internet. Again, a mortgage broker might find you the best rates available. Most rates can be locked or held for a period of time while waiting to find your property or waiting for the closing. If the bank rate goes up, your mortgage rate stays the same as long as the mortgage is entered into within the held period. If the mortgage rate goes down, then you get the benefit of the lower rate. Currently, banks will do a rate hold of 90 to 120 days. However, lately, this may no longer be 120 days. So check with your mortgage lender on how long they can offer their rate hold. Also note that if you consider buying a new construction pre-sale home that is still under construction, then often the vendor can give you a multi-year rate hold and may offer some great rates. Have your realtor check that out for you. There are many sources of mortgage and financial calculators on the web. I have a number of these free to use on my own website, so please use them. You can jump onto my website at GarySimsVictoriaHomes.ca and select the Valuable Resources menu option, then the Calculators menu option. Make sure to scroll down as there are a large number of different calculators here, and feel free to try various ones out. The link is also in the description below this video blog. Note that the bank mortgage payments, interest and amounts calculated may be slightly different depending on how they calculate the compounding periods within the mortgage. Not all lenders are the same. I will walk you through an exercise to see what mortgage amounts you can borrow, and as well look at the rate decreases of 0.25% and 0.5% and see how this affects your payments. The first example is a 5-year uninsured fixed rate. Let's assume you're buying a townhome for $800,000. You have 20% down of $160,000 and you need a mortgage of $640,000. We will try various interest rates. To open the mortgage calculator, do the following. Go to my website at GarySimsVictoriaHomes.ca. Click on the menu item Variable Resources, then click on Calculators. Scroll down and select the Canadian Mortgage Calculator by clicking on the Calculate button. This calculator assumes semi-annual compounding, which makes the effective rate a tiny bit more than the interest rate. For the loan amount, enter $640,000. And for the interest rate, let's start with 5.14% year fixed insurance rate. For interest rate, let's start with a 5-year fixed insurance rate. Type in 5.14. For length of mortgage years, enter 25. Now press the Calculate button, and this shows that the monthly payment will be $3,773.45 for 25 years or 300 payments. The total amount paid will be $1,132,032.63, and the total interest paid will be $492,032.63. Now let's reduce the interest rate from 5.14% by 0.25%, which is what we think Bank of Canada's next reduction will be. This assumes the bank changes their rates at the same amount and around the same time as the Bank of Canada does. Not all banks will do this. The new rate is calculated at 4.89%. Enter the new 4.89% interest rate and leave all the other settings the same. Then again, press the Calculate button. The new payment amount is $3,682.30, or a saving of $91.15 per month. The total amount paid and the interest paid is reduced by $27,343.54 over 25 years. We can see that on a mortgage of this size, that each 0.25% reduction will save you an average amount of about $1,093 per year. Just for fun, let's suppose that the rate comes down the full 1.5% over the next 8 months, as predicted by some. This would reduce the 5.14% rate to 3.64%. The payment would be reduced to $3,242.81, which is $530 and change lower, with a 25-year saving of about $159,191 in interest costs, or about $6,368 per year. It is amazing what a small interest change does to the savings. You can play around with other amounts and interest rates. On the same calculator, you can determine how much you can borrow based on a monthly payment amount. Let's assume that you can afford $3,000 per month payment on 5.14% with a 25-year period. So do this. Click on the drop-down on the first row and select monthly payment and enter $3,000. Second, enter interest rate at 5.14%. Enter the mortgage length as 25, and then press the Calculate button. In this case, you will see you can afford a mortgage of about $509,000. Now let's try it at an interest rate of 3.64%, which is a 1.5% lower than currently, and which we're predicting could happen over this year. You could then, if you put in the number, afford a mortgage of about $592,000. There are other factors that banks consider, so affording a $3,000 per month payment might not be a guarantee that the mortgage lender will lend you the amounts shown here. This just calculates that if you were approved that these amounts would be doable. There are a bunch of other calculators on my website, so feel free to use these to understand the various options for mortgages and other payments. Some other mortgage calculators include biweekly payment, mortgage payment table, calculators showing each month principal and interest portion, car lease calculators, tuition savings calculators, rent versus owning calculators, and many more. I am happy for my clients to point them to good mortgage brokers that can do the actual assessment and approvals for your mortgages. Remember, before you can buy your dream home, you need your financing in place. If you think this video was helpful, then you will want to take a look at the many free handouts you can download from my site with all kinds of useful real estate advice. And as well, here is a playlist for those who are considering downsizing in the next year. Thank you for watching, and I will see you next time.